Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest and fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. You tune into our show because we do our best to try and figure out what the heck is going on in our market. Well, that's what we're going to do today. What our price is going to do for the rest of 2022. One question that we have for our show as well: does the real estate industry want to change bidding wars? There's a lot of talk about that right now in the media. We're going to try and explain the different perspectives and who is still buying in Toronto. Isn't the market supposed to be crashing? Then why are there some situations where people are putting in double-digit multiple offers in such a real estate climate? We're going to explain why that is happening. But it's been a while since I put in an episode. In fact, this past weekend was Easter. So happy belated Easter, my friends. The best part of Easter is obviously the message of the cross and the Easter bunny. Unless you don't believe in the Easter bunny, that would make you agnostic. Anyways, we like to have some fun on the show. For those of you who have stuck around with us for such a long period of time, you're going to notice a bit of a variation, a change. It's subtle, but there is a slight change in our show. I've done a little bit of soul searching as I've been putting this podcast together, and I want to get back to the good old days where we keep it simple and we like to answer some questions and talk about the news of today. And a lot of you have been sitting back thinking, where's Bradley been? This is what I've been doing, really contemplating on what we want to do with the show, what direction we want to go from here as we get the next big wave, not COVID wave of real estate news and information as it hits us. This show originated from COVID and all that craziness and hecticness, and I haven't wanted to be silent the last couple weeks, but rather I wanted to be able to set ourselves up to make it great moving forward. And that's exactly what we're going to do. So today I want to start off, actually hit the like, subscribe, all of the things. But I want to start off with the first question: what are prices going to do for the rest of 2022? If you're like me, you're asking this question, and we have a history in Ontario of just bad predictors, bad estimations of what's going on in the climate of the real estate market. And kind of, digging through all of that has been what's made this show so great. And I think has been able to encourage myself and encourage our listeners as we're all trying to figure out what exactly is going on. Well, today we're going to start off with a CBC.ca article that reads: Canada's red hot real estate market showed signs of cooling down in March as both the number of homes sold, which we expected, and the average selling price declined from the previous month. So year over year, we expected the declines, namely the number of sold, maybe not the price. Some expected the price, but the sold for sure. But month over month, moving into March, across the country, we're talking Canadian statistics here, I don't think a lot of people expected that to happen, especially rounding into what is turning out to be a beautiful spring, might I add. I'm just kidding. Jokes. Anyways, price. What is going on with price as far as the Canadian Real Estate Association? Here's what they say. It's representing over 100,000 realtors. CREA is a strong association. They report on Tuesday that on average, homes sold on the MLS went for 796,000 buckaroos. Now that sounds good until you recognize that it's down from the all-time high of the previous month of 816,720, which puts us, by my math, about 20 grand drop. That sounds like a shallow drop when we look at what's going on at your neighbor's house across the street here in the GTA, but interesting nonetheless that even in some of these more affordable markets across Canada, those places people are fleeing Ontario to go to are also being affected. But of course, a big driver of this is the major markets, including the GTA. But a noteworthy change in direction after the unprecedented tear that Canadian home prices have been on for the better part of 2 years now. So they talked to CREA chair Jill Udil, and this is what they said: 1 month does not make a trend. So we'll have to wait and see if this is the beginning of a long-awaited cooling off of this market. God forbid the real estate industry tells us that the housing prices are going down. It took a while for the news outlets to even figure that out at the beginning of April, looking over March. In fact, we even kind of saw it happening halfway through March, but whatever. We're going to let them have their perspective. And I want you guys to think beyond kind of having a bias. And we all have our bias. Of course, as a fellow investor, I tend to lean in favor of I want prices to go up until it looks like this. And then it starts to get a little higher risk to just be okay with everlasting exponential growth in the GTA. But let's not go on that rant. So let's talk about some of the numbers as we look across the country. Number of sales. March is typically a strong month for home sales, but instead, the month represented the biggest 1 month decline in sales since June. That's right. Total sales came in 5.6% lower in March than they did in February. Not year over year, not competing against the Goliath of 2021 and all of the amazing things that happened. And of course, we were going to fail. No. This is moving into a spring market. We're still seeing sales dropping. It's incredible. Of course, year over year, though, down from February levels, the average selling price is still up. Price is up more than 11% compared to where it was a year ago. But that pace of increase is slowing. Here's how they kind of circle this back in. March annual increase is about half of the 20% annual gain clocked in February. So for those people who say house prices are dropping, this is, again, talking about Canada. We can get a little more specific here, but specifically Canada right now. Yes, house prices have been dropping month over month, probably since February, right? February, March, and I would even argue April has continued to see that trend. But year over year, we are still up. We are still ahead. And that is maybe the point of confusion for a lot of people. It's why you'll read one article talk about house prices are rising, another argument saying prices are dropping, both of which are correct. But you know you're in a market crash when it's time to start talking about HPI, the home price index. Soon as the news outlets start saying HPI, I don't know about you guys, but my rabbit ears perk up and I say, well, hold on a minute. If we're talking HPI, you're dancing a little bit. You are. And the HPI is a fantastic measure. It, of course, compares housing type by housing type. If you have a condo, how are condos performing relative to other condos? If you're in a detached, how is it competing with other detached? And so in some ways, it is more specific. But I just find it so convenient that when house prices begin to tumble, especially at speeds that we haven't seen since 2017 and then again in 2020, which obviously bounced back pretty quick. So I think this is going to look more like 2017, in my opinion. But it's amazing how in those windows of time, HPI becomes a big measure, but let's look at it nonetheless. So the Realtors Group trumpets a different number known as the HPI as a better gauge of the market because it adjusts for the volume and type of housing. The HPI increased by 1% in March, a market slowdown from a 3.5% in February. So we are slowing down. Right? We're slowing down because it was 3.5% increase. Now it's only a 1% increase. Forget the drops, right? Forget all these drops. It is still increasing, just slower. As is the case with the national average, however, the HPI is still up an eye-popping 27% on an annual basis. Well, then why would an HPI number be so high and still positive when everything else is looking negative from a price perspective? Well, the reason is because people are purchasing what? They're purchasing condominiums. And we knew this on our show. We talked about how condos are going to have a fantastic year. And yes, they are. We'll share some of those numbers along the way here. Meanwhile, the detached segment, the low-rise single family, is getting pummeled, and either they're selling them at a loss, which is happening, by the way. You're getting fantastic deals. Oh, if I could share some of the things that I got on the go right now. We're going to leave them for a future story, but it's unbelievable. Hundreds of thousands of dollars off in the GTA. You guys are missing if you're on the sidelines. Meanwhile, we see a lot of people are just kind of, pulling off the market altogether, saying, to hell with you, to hell with Bradley's clients looking for deals. Come on, right? And so those numbers, they get suppressed, the number of sales, and we'll actually see that the number of single family homes selling is actually down significantly compared to the moderate decline or smaller, maybe half the size decline in the condo space. So that HPI plays into that. If we start to see a higher proportion of condo selling, obviously the prices are going to drop month over month, but it's artificial in the eyes of the real estate board, the real estate industry and professionals because your house value didn't drop. Just the housing segment has kind of changed which one is selling. And that's the way that happens. A true indicator, HPI is, but convenient at a time like this that we will put that number forward because, the days of average price selling 40% over asking, that works well in a narrative on the up, but not so much on the way down. So we're going to look at the buyer response. We're going to look at the seller response. And hopefully along the way, you guys are getting a sense of what the market is exactly doing and what your place is as an investor today. Nazma Ali, broker and founder of the One Group Real Estate, says this: the trend has become even more pronounced in April, where buyer fatigue may be setting in after the Bank of Canada hiked its interest rate twice in the last 2 months and is expected to raise it even more in the coming months. We're going to tell you what that looks like too, but They say this: I just think that this is kind of the beginning of a slower market, maybe a more balanced market. We're kind of at the top. We've just started to go down a little bit, but I just don't know how long or how low that downward will be. I love the way it's said is hesitating, right? There's a hesitation even in the kind of explanation of what's going on there. It's almost as though people aren't afraid, that people are afraid of putting their foot forward, putting their neck on the line and making guesses. Not us, but in the news, we definitely see that hesitation playing out. So we have this buyer fatigue on the buyer side, and I'm absolutely seeing that play out with my clients. But in the meantime, we have a response from the sellers. It looks like this. Talking to Syed Azhar Shah is one would be seller. So this is a seller having to adjust their expectation down, so homeowner, a little in the current market. So I got to bring my price down a little bit. I think that's a massive understatement. Shaw listed a home for sale in February, but recently took it off the market after being underwhelmed by what he was being offered. Because there's so few buyers, there's so many listings, it's actually not a balanced market. In a lot of markets, we're talking outside in the suburban GTA, it is a full-fledged buyer's market. Just believe me, guys, this is what we are seeing. Maybe it's short term and hopefully it balances back out, but we have seen in a matter of weeks, it turn in some segments into a buyer's market, and sellers are not comfortable selling in a buyer's market, especially when they've been spoiled rotten with, under 7 days on market and hundreds of thousands over asking. All of a sudden you're giving them an offer below asking. That's what's playing out. And they're saying the hell with you. And hopefully that kind of tandem buyer fatigue is balanced out by the sellers, not fatigue, but lack of interest of undercutting the sale of their home. But in the mix of all of that is desperation, not even shared in this article that I'm seeing play out. People who have bought with pre-builds and they need to sell their house. I have to sell. I got to take the discount because I need to be able to close on this pre-construction. Buyers who have taken that risk, whether that's by the realtor's advice or by their own accord, decided I'm going to put an offer on a place because the market's so hot, I can't find something. And now they are left to close. We just purchased on a property that's going to close in June next door for 1.3. My client just locked up a couple doors over under $1 million. What happens to my friend over there that's purchasing a property for 1.3 and the bank reappraises you and says, sorry, my friend, that's it. We are not funding. That property comes back on the market. And I've actually seen a segment in House Sigma, which is really interesting, that says homes that have sold below purchase. I've never seen this segment before. Essentially, people selling their house for less than what they had bought it originally. And they have data on that. It's just such a shock to see this transition. And this is something that needs to work its way through the system and is creating a fantastic buying opportunity for people who are ready and willing to take that step and that risk into the housing market, because there's not many of us out there. But what comes next? Robert Kavcic, an economist with the Bank of Montreal, says it's too early to tell if March represents a blip or the start of a new downward trend, but he suspects the latter. The suspicion here from BMO being that we are going to see a downward trend. Here's what he says. Keep in mind that last March was the absolute summit of the pandemic mountain of demand. So the reported year-over-year drop is somewhat exaggerated. There seems to be signs that the appetite is pulling back amid higher mortgage rates, and the decline in March might be the first in a longer series of softening trends. Government, central bank, and buyers, they all seem to have an interest in prices coming down. Even sellers have an interest in prices coming down out of fear for the next generation. We as a culture are wanting prices to come down. And with a 30-40% increase year over year in price, what is a 20% drop? Really, truly. So everybody's voting for that and rooting for that until that bottom happens, where we say enough is enough at every level. And I think it's going to happen overnight. We're going to see that happen very quickly at some point. Whenever that happens, we can start the clock all over again. Again, if you want to see what my expectation is as far as price and how the market will unfold from the sales to new listing ratio, sellers, buyers market, where do we land, balance market, how does that all work together? I think a very good view of that, in my mind anyways, is 2017 and how that played out. So if you're curious, you can go and check out the charts on how that played out. But it did take some time for us to regroup and catch ourselves again. And I think that that's what's going to play out. What also I'm noticing as a trend is as I'm watching some of these markets go up and down, the ones that seem to be dropping the most were the ones that were the most successful and therefore kind of getting back in line with their curve, their price growth curve. And as they seem to be hitting those price growth curves or slightly below, they seem to be bouncing back and kind of saying the end of the deal. Now multiple offers will start triggering again. Another kind of trend, but it's hard to predict where the bottom is on any market. And every single market in the GTA is different. It really is. Downtown core is outperforming in a lot of ways the suburbs. It is. I haven't looked at the cottage country in a little bit, but from what I've heard, they're doing okay as well. So depending on what people are looking for, and it's different. So you have to be fully informed in the markets that you're searching in, but there's definitely deals all across the board right now. CTV News. Royal LePage, though, is taking a step to say they're forecasting that 2022, despite some signs suggesting that the real estate market might finally be moderating after a frenzied run-up in prices during COVID-19 pandemic, the real estate brokerage, how dare they, has initially forecast Canadian home prices to rise at 10.5% in 2022. And what did I say back then? For those of you who follow our show and they hold me to it, what did I say? I said, and I still kind of think this, that could be an underestimate. I would err on the side of it could be more. At least 10 could be more. Well, guess what? Now, with hindsight here, after having gone through the first quarter, it now says it expects prices to be up 15% by the fourth quarter of 2022, driven by a continued acceleration in the Greater Toronto Area. How can you say price growth is going to happen in a market that is tumbling? It's at its knees and people are desperate. Guys, how far back do we need to look? Recognize if you just cut out those first couple months of price growth, we overshot the estimation for price growth from the Toronto Real Estate Board in like a month and a half. I think it might have even been in the first month. It was unbelievable, the price growth. So that's where we're starting from. We have to come a long way down in order to wipe out this price growth. And I just don't see it happening. And even if it does, it's going to come on the tail end of what we still have in the GTA, which is a housing supply issue in crisis. It's why the generation or the type of people that are still buying. We're going to talk about that later in the show as well. But Royal LePage President and CEO Phil Soper said that while there are signs that there could be some change afoot in the market, with the number of listings increasing slightly in recent months, there is nothing to suggest that a correction is on the horizon. I don't know, man. I think a correction has already happened, but that's okay. That's okay. This is obviously taking the stats from the Canadian Real Estate Association, but here are the reasons why they say that there will be an increase. After all, it's a complex thing, our economy. Some things might make prices rise, other things push consumer confidence down, and that's the kind of turmoil that Canadians are wrestling with right now, Soper said. In general, things continue to look positive for housing in the country as more people move to Canada, but people are being a little more cautious, and certainly in the rising interest rates have heightened people's awareness that the economy is in an unusual place. Demand for housing in Toronto and the surrounding region remains strong. Despite a slight increase in new listings in recent weeks, competition is still very tight among buyers looking to enter the market ahead of further interest rate hikes. Not a bad point either. Keep in mind, interest rate hikes are not slow. They're going to keep going, guys. They're going to keep going and maybe even faster. And so that means if you have any thoughts of getting into the market, getting in sooner while you've got those locked in, pre-approved for whatever that's worth rates at your lender, maybe you get something quickly, right? This is there's this balance. And I'd be very curious to see the numbers. I hope someone puts this out because it just seems like a lot of work, but I would love to see the price discount that exists in some of these markets in combination with the increase in interest rates. Is it equal, or do we actually find that there's more of a deal and people are in a better situation? Or do we find that the interest rates have caused such a problem that even with the discount, it's still less affordable to purchase a place? And I think that depends market by market. That's why it's just way too complicated for us to do on the show. But it's interesting to note that as interest rates rise, your affordability goes down and prices come down into a buyer's market. Maybe it's a wash. And maybe people are just okay with taking that low price, knowing that we've already kind of got our foot halfway in the door on higher prices. And hopefully long term in the GTA, we have higher price growth to come. But you as investors are savvy enough listening to our show and diagnosing the market to understand that that's ultimately your call. And don't blame me for your lack of success, or you can credit me for the success though. I'll take the one-sided approach. The condo market is particularly competitive, he says, as some former residents are returning to the city due to return to office mandates and first-time buyers looking to enter the market as a more affordable price point. That's what's leading to condos. We'll share some of those numbers in a bit, but I want to get into our next topic, moving along. Does the real estate industry want to change bidding wars? Because the news right now would kind of indicate yes, they do. But I think this is a much deeper and complicated conversation. We're going to start with the CTV news article that kind of reports on what's going on. The Ontario government is introducing new real estate regulations that would allow home sellers to share bids on their property and disclose the details of competing offers. As the system stands right now, individuals looking to put an offer on a home do so blindly without knowing how much their competitors are offering above the asking price. The new regulation will give sellers the option to opt for an open offer process. Now, we got to be careful with personal information, and this is kind of the dance that's happening here, but sellers will no longer be limited to selling their property through a closed or traditional offer system. That's the point here. We can do an open bid if we choose as a seller. With these changes, hardworking Ontarians can rest assured knowing that our government has their backs as they embark on their journey of home ownership. I'm shaking my head in a lot of the points that are made here. I'm going to share what's good about this new plan. It's called TRESA, Trust in Real Estate Services Act. It's replacing REBA 2002, which was governing the real estate industry. And it's going to come to a lot of education and learning for your realtor friends out there, myself included, explaining what those major changes look like. But there's a lot of consumer protection. But the big kind of fun in all of this is this open bidding that's to play out on April 1st of 2023. So we got a year runway to get everything ironed out and sorted out, but that's the play and that's the direction. Kevin Krieger, president of the Toronto Real Estate Board, you've had him on his show before. He applauded the government for bringing further options to the home seller process. And here's what he says: I think optionality is a good thing. I love the spin. I love the spin on that. The CEO of the Ontario Real Estate Association agreed. Of course, they agreed, Treb, Aria. They're in each other's pockets, saying this policy strikes the right balance between adding more transparency to the offer and protecting the rights of home sellers. Tim Hudak, also had on our show, the CEO of AREA, said, we called for the province to introduce these common sense reforms, and we're pleased to see them coming forward today. I feel like the decision to have this open bidding has come from kind of calls from people to have this happen. But here's the objection. And things are off track when I'm agreeing with the points of the Green Party. That it pains me to say, but can we not just think about this kind of rationally? Here's the opposing view. I'll let you guys kind of figure this out yourself, but here's my thinking too. On the other hand, the leader of the Green Party of Ontario, named Mike Schreiner, issued a statement calling for a consistently transparent bidding process. Home sellers shouldn't be able to pick and choose when the bidding process is transparent and when it is blind. That defeats the purpose of ending blind bidding, since it's in sellers' interest to keep buyers in the dark. Let's end blind bidding and let's do it properly. And how interesting, right? Like, we get these pushback for open bidding, and even the federal government plans to do open bidding across coast to coast, big plans. And there's massive pushback that happens from the Toronto Real Estate Board that's not even played in this article, saying, bad idea, terrible. Sellers need to have the right to decide how to sell their own house. And I hate to say it, but my opinion is in line with the Green on this. I don't think that's fair. The way that I kind of look at it, I've tried to think of an analogy, and I'm not very good at them, but I look at it as like, I'm working in a factory and I want to dispose of my waste. I should, as a factory, have the opportunity to dispose my waste however I want. I can put it in the garbage, or I can dump it in Lake Ontario. And that's my right as a factory. Is it not the rules, and is it not the point of these associations and of the government to kind of create the framework to protect the culture, to protect everybody else? And I think in the line of fire here is the buyers. That's what's happening, because unless we're just to say that maybe there's a world where open bidding can actually outperform in the price point of the sale of the home, but I don't think that that's accurate. And even though Treb would say, yeah, like, you don't know for sure if it does or doesn't, it's because we haven't had it. Wait until this rolls out and people recognize that nobody's doing open bidding, and the ones that do are underperforming. I expect that that's what will happen. Anyways, rant stops here, and I want to share with you an AREA article that came out to all of us, and I'm going to share some good. Mama taught me that whenever I give feedback, I need to start with the positive, and the positive is this. I think this is kind of cool. Real estate professionals will understand this. There's a difference in our industry between clients and customers. Customers, essentially somebody you just owe a duty of respect to, and they don't have to represent them with any fiduciary duty. Whereas a client, you do. Most real estate professionals you running around are acting on behalf of their clients, not customers. But how confusing a term is that? So they're going to change it to self-represented party. I'm going to not represent you. In other words, you are self-represented. You are no longer a customer, but representing yourself. And I will continue to be, They say a client. The client terminology, I believe, will continue. And I think that that's a good way of kind of creating transparency, because there's a lot of confusion in that. I remember when I was learning at the real estate days, I'm like, what the heck? Client and customer? Way too confusing. But of course, we have this silliness here going on where I think that ultimately by having this open bidding is not going to help sellers achieve the top price. And so they won't opt for that. And therefore, having it be to the discretion of the seller with no buyer I mean, buyers probably would have to agree to it, but it sounds as though it would just happen by the seller's command. It's good for price growth. It's good for homeowners, but it's bad for buyers, especially first-time buyers that just can't compete. Meanwhile, we've got kind of all this like flying around of inspections and being able to allow people an opportunity to view the home. Maybe that I actually think could do better than this, where we create a mandatory inspection period for all buyers, therefore creating a level playing field and removing that kind of success of a blind bidding war or multiple offers, because at the end of the day, everybody's offer is conditional, kind of levels the playing field. Anyways, we won't go down that rabbit hole. But where I do want to go here to wrap up our podcast is who is still buying in Toronto? Because we have situations where you have virtually no showings in some markets and the offers are crap. But somehow we have these properties, meanwhile, that are popping up and getting so many offers and going hundreds of thousands, maybe even millions over asking. Well, we're going to tell you right now through a Globe and Mail article, who exactly is that? Does that apply to, and where does that fit? As somebody that's thinking about selling your house, you can maybe decide where you fall, but it's even as a real estate professional, it's difficult to understand what people are looking for and why and what markets and how to price your home based on what's going on because of all of this craziness. Well, here's what they say. The deceleration in the Toronto area real estate market continues as buyers and sellers come to grips with the most recent interest rate hike by the Bank of Canada. Quote, I'm hearing a lot of wait and see, says real estate Manu Singh of Right at Home Realty. They're feeling a bit paralyzed. Okay, so we're in this weird market, right? We said among the confusion, some properties are seeing sluggish activity while some outliers are creating a frenzy. This is the chaos. Every week it feels like it's different with the market. Mr. Singh says he's working with clients who enter the contest for a 4-bedroom detached home in a Baby Point neighborhood in Toronto West End. And I'm seeing this too. Like I'm seeing this up and down. The house was listed below market asking price at $2.8 million, and Mr. Singh expected it would sell for 3.2 and possibly 3.3. Well, they're expecting 6 to 8 offers. They had 16 bids and sold for 3.99. So that is over $1 million, 1.1 or 1.2 over the asking price. And all happening in the same market as people getting massive deals, hundreds of thousands off the price. How does that happen? Not far away in Sunny Lee area, a raised 3-bedroom bungalow was listed at an asking price of 2.89 and sold for 4. My clients, he says, are flustered after losing out on 2 bidders who each paid more than $1 million over asking. He says the segment of the market is not held back by an increase in interest rates for affluent move-up buyers. The challenge is the lack of supply. So here's the truth, guys. And this is the difference the wealth gap has created in Canadians and in the GTA. Some people, the vast majority, are impacted by interest rates. Maybe even I'd say the vast majority are impacted primarily by interest rates going up and their affordability therefore going down. But there is a select group that finds that the hardest thing is not fighting against interest rate increases. In fact, a 4% interest rate in the big picture is not a big deal. Who cares? The hardest thing is to find a house. The supply issue in our market way overshoots by over $1 million on an offer price the fight that everyone else seems to be having with this interest rate increase. And that is the difference. That seems to be where there's a difference. The Bank of Canada raised its rate by 0.5% in April to 1%. And that's the largest move at one sitting since 2000. First time buyers are more sensitive, right? Semi-detached homes in the 416, buyers are now moving over to condos. Condos have fallen out of favor for a time, but now they're starting to see this high-rise living rise up again. Now the pandemic restrictions have loosened and some workers are returning to the office. Condo number of sales in the 416 have dropped 18.3. In the 905, condos have dropped 16.3, but relative to a single family drop of 34%. So we see the drops, but not nearly as much. And we see people being pushed because of the interest rate increase into these smaller segments, into areas of more affordability. Meanwhile, we have people that just don't care. They're just happy to have a property that only has 16 offers on it, where you're able to get something in the GTA because supply is tight. Now, I did mention that we were going to talk about what interest rates are going to do next. Well, there seems to be indications from the Bank of Canada Governor Tiff Macklem and some of the people who have followed his newfound hawkishness. They seem to predict that there's another 0.5% rate coming, point increase in June. Is he just speeding up the process, or are these 0.5% increases an indication that we have way more increases to come than expected? Some people think that there isn't going to continue to be these massive rises in interest rate. In fact, in this article, here's some of the reasons why there might not be. With signs that housing is already slowing in response to the rise in mortgage rates over the past few months, they doubt that central bank will be able to raise interest rates much beyond 2%. If we're wrong, and it rushes to do so, the resulting downturn in housing will be much worse. So there is some lines of thinking, some camps that would argue, yes, we're increasing it faster, but we've already seen it play out and playing out very quickly across the country. So therefore, there's going to be an upper limit on the interest rate. And those people will obviously find themselves in variable rate mortgages. But if we happen to be wrong and we're overshooting it, the hawkishness goes way deeper than expected, then yeah, we could find ourselves in a tremendous buying opportunity here in the GTA and across this wonderful country called Canada. And so there we go. There's our conversation for today. I do apologize for the delay in getting this episode out. Again, it's been very much me trying to think about where we want to go with this podcast. I'm hoping to start to do more frequent podcasts, but obviously in this format. Tell me what you guys think of this format where we have these questions and we're kind of discussing and talking about articles maybe more in depth versus just kind of like 4 or 5 hours of research, which is just way too difficult to do on an ongoing basis. I like to be more timely and more updated and more detailed and be able to just kind of riff a little bit. You know what I mean? Like things just change. I guess things change. And in that way, they get better. Unless it's, I guess, Easter, right? Like finding eggs is a pretty sweet thing. I mean, like imagine a grown man. Like I'm picturing like Arnold Schwarzenegger going around like looking for eggs, right? But it's okay. Because if you ask him if he can't pick up eggs, if that's a deal breaker for him, you know what he would say? No, I love Easter, baby. I still love Easter, baby. That was the, anyways. I was so focused on trying to hit the Arnold accent, which I also failed. But there you go. No, I still love Easter, baby. I hope you guys had some fun. Hope you learned some stuff. And leave some comments down below. Let me know what you think. If you've been following our show religiously, I would really appreciate if you guys could leave us a 5-star rating and review. Take a minute on iTunes. But I will see you guys next time. Take care and keep it real.